Hey everyone, time for a quick review. I'll turn this off for now and we'll put the moving averages here. I wanted to show that both individual names and market-wide we're kind of at a resistance level and I doubt we get through it. So bearish bias for the next couple of weeks. Before getting into this, I want to explain a bit of the mechanics of double bottoms and double tops from an option perspective. In that there is a mechanical reason why double bottoms and double tops occur. Uh, for example, when we drop, people load up on puts. And when we do bounces, people load up on calls. But uh, usually when the market drops, people don't buy short dated puts necessarily, or they of course they buy short dated puts as well, but put buying is skewed more midterm oriented, like 2-3 months out, because there's an element of protection to it. Like short term puts are speculation, midterm and long term puts are hedges. And because most of the market is long, they don't actually want to speculate on puts. They actually want a hedge. So they buy like 2-3 months out, let's say 3 months out puts, to have their portfolio protected. And when we bounce, on the other hand, it's mostly about speculation. Like people who are long for the long term don't really speculate. They buy long term. Like for example, if you buy a call at the bottom and you are bullish on that call, you do like a 6 month out leap, so kind of thing. But the majority of call buying is speculative at bottoms, and because it's speculative, it's short dated. Let's say at most 1 month out. And this, what happens is we drop, we drop, we drop. People buy like 3 month out puts. We bounce and go up. People buy like 1 month out calls. And which expires first? The calls, because it's speculative. And then when those speculative calls expire, what we are left with is the effect of the longer term puts, which then acts as a magnet and takes us down even lower. Um, and the double bottom aspect of this, like we we see here, we had a drop, then we have a huge rebound because the effect of speculative call buying, and then when those speculative calls expire, we are drawn back towards the lows. And when we do the second leg down, usually people don't load up on calls. This is all speculative as well, and on puts. Sorry, they don't load up on puts again because what's the point? You already have puts bought that were like 3-4 months out, and they're still active, and you can just get out here, and that's it. So we had a drop, we had the speculative leg up, but now we are coming to the point where the speculation ends because they expire. And what we will be left with is the puts, which most likely were bought for September expiration, and they will act as a magnet drawing us down towards into going into September OPEX. This combined with the fact that market is at a resistance level, so we can see this is a trend line for the top here for SPY 50 MA, which we failed to restore. It's the monthly and quarterly green-red pivot, so kind of a resistance level. For Qs, we are at the trend line on lower time frame for here as well. We are just slightly above the 20 MA, but we can get rejected very easily and go back below the 20 and the 100. Um, going forward to Tesla. Tesla tried to go above the 200 MA, but failed. We closed back below the 200, and you can see that all of this look like bear flags or like a rising wedge in which slightly we get rejected. Apple has a very steep wedge, and I think it will get rejected as well. We're getting to the supply area for Apple. Nvidia 50 MA probably getting rejected. Google has been very weak and very likely to do our 200 MA retest. Amazon getting rejected at 200 MA, Microsoft 20 MA and slightly above the 200 and very likely to get a retest. Meta is the only one that is near the highs and maybe get a rejection here. Still looks like a wedge. Netflix kind of the same as Apple and Meta, and the only one that successfully recaptured a big level here. Some don't really care, but even stuff like MU, like we're back at the 200 MA combo of resistance. Dell 200 MA, 20 MA. What else? AMD. AMD retook the 20 MA. This has a bit of room to go like to 155 or something like that if we would be able to do that. But this combo of resistances and horizontal level seems very, very tough to break out of. And yeah, that's kind of the situation and the setup, which is relatively bearish in my opinion. Like I don't expect a drop immediately, and I'll turn back the lines. Let's take out the moving averages because there's a lot of stuff here and it's noisy. Uh, Trend line, green red pivot 50 MA, and I think we can do like a poke above, but ultimately I think this will be a rejection and next week we start going back down. Doesn't necessarily mean we retest the low, but this should be a substantial move down, not just this. So we are, let's say we go to 545, and the minimum I think we will see is something like 530. But this can be more. It depends on the market reaction. It depends what happens at Jackson Hole next week. But that's kind of it. So I think uh, we see 530 on SPY at the minimum, and for Qs probably let's see trend line here as well. We are, let's say we see 465-ish, and we should see 446 at the minimum, 445 probably. This low AVO up should be retested before we go up. So 445-ish, something like this. Still a decent drop. And finally, VIX is back to the level where this whole move initiated from. So we are back at 16. I think this is the support we've been waiting for VIX. And I think it's very likely that we see a bounce. And the bounce is, in my opinion, going to be substantial, maybe potentially retest 30, something like this. Uh, uh, we need this to be 30 for it to be a low retest. I don't know if it will be a low retest, but I would expect it to be skewed towards the larger size than the smaller size. It's still going to be a lower high because we went to 60, fucking 60. But I think we are at the point where the whole market is aligned towards rejection, and the potential for low retest is pretty high. Okay, that's it. Have a good one. Bye bye.